Ja, bei mir ist jetzt der Chairman von Tosca Mining Corporation, einem Unternehmen, das Explorationsrechte in Texas besitzt, sehr nah zur mexikanischen Grenze und im Bereich Moli sehr aktiv ist. Hello, Sadek. How are you today?
Very well, thank you. Thank you.
Thank you.
Good to
Do
be
you
here.
enjoy the show?
Yes, it's been very busy, but
Yeah.
it's been very enjoyable, and everybody is here.
Yeah, that's right. What is the principal focus of Tosca?
Tosca has acquired an option on a very large molybdenum deposit in South Texas. Initially, we acquired it on the basis that it was a copper deposit, but our exploration activities has shown us that this is a very large molybdenum deposit. We have just published last week our 43101 compliant resource document, and we are going to be publishing the preliminary economic assessment within a matter of a few weeks now, and that is to answer the four questions of any projects. How many tons? What is the grade of the metal? Can the metal be recovered? And what are the economics? For now, we have answered the first three questions. We know the tons, we know the grades, we know that it's easily recoverable, and now we have to answer the economics. That is why we're targeting the preliminary economic assessment.
Okay, so that's interesting. Let's go a little bit back to the moly. What is moly and what is moly used for?
Okay, we call it moly, but it's short for molybdenum. Molybdenum is an essential additive to the steel industry. Anybody that has pipelines, builds pipelines, and other specialty metals, they need to add molybdenum to iron to make a specialized steel.
Okay.
So it is currently, it is about $15 a pound, and it has some ups and downs in the cycle of molybdenum.
So molybdenum is very important in the...
It is for some steel makers. It is an essential additive.
Yeah. Okay. So let's talk a little bit about the management. What is your background and the background from the management?
Okay, I'm a mining engineer. I have been involved in mining for almost 40 years, always in operations.
Okay.
I have operated in many parts of the world in underground operations, gold and zinc and lead and iron ore and large open pit operations. One of my recent assignments, I was in charge of the Iron Ore Company of Canada, which is the largest mine in Canada. I was the general manager of that operation. I was involved in South America in very large gold operations.
Okay.
And I joined the board of Tosca 2 years ago. And at Tosca we decided that our mission was not an exploration company.
Yeah.
We wanted an advanced project that we could put into production.
Okay.
And so if you look at the consistency of our board, I'm there myself with almost 40 years of operations experience. Another gentleman, Dave Stone, also on the board, is a very strong project development mining engineer. And of course we have Dr. Luca Riccio, who is one of the best geologists that I've ever come across. So we are focused on advancing the project. After the preliminary economic assessment, we have a drill program this summer, and the objective of this drill program is to see us through to a bankable feasibility study within 12 months.
Yes.
About 12 months.
Yeah.
The objective is threefold. One of them is to expand the resource. We know how to expand it at depths and to the south. The second objective is to improve what we call the quality of the resource. Right now it's inferred category. The inferred category has to be moved to indicated, and from indicated we put a mining plan around it, and we have a proven and probable reserve. And the third one, of course, is it's a bankable feasibility study, is then to tighten up the economic parameters.
Yes.
And that is our plan following this summer drill campaign.
Yeah. So that's very interesting. You are at the moment you are in the exploration status, and you like to bring the company in a production status.
Right.
So what's the infrastructure like in Texas? So you have a political climate which is perfect, I guess. But what's the how to get in and out to the project.
Okay, one of the things that makes some projects very expensive is infrastructure. And we are in Texas. We have Highway 67 come right up to the gate of the property. We have a high tension power line, 240 kVA power line, comes right through the property. So access is very simple for us. We will not have to spend tens of millions of dollars on infrastructure.
Yeah.
Texas is open for business. It is friendly to business, and our neighbors, about 3 miles away from us, is a silver mine, also a Canadian-listed silver mine by the name of Orcana, and they are building their project right now. They're more advanced than we are. They're building their projects, and we are very happy to see that they have not had any impediments to advancing their project.
Okay. So last week you published an exciting press release. Could you tell us more about this press release?
Yes. I need to start from the beginning that only in April last year we signed a letter of intent with the landowner and the mineral rights owner to as an option to acquire the project. Within a few weeks we were drilling, and within 6 months we already had results, and we were doing metallurgy. And what we published last week was the first resource document on Red Hills, the Red Hills, and in it there's approximately 300 million pounds of moly and about 200 million pounds of copper. So we have done this in less than 12 months, which is a really fast forward in our business. So that's what we published, basically.
Okay. And what are the next steps over the next 12 months?
Okay, the next step, we need to raise some capital in order to drill. Now, the drill holes are all 2,000 foot deep, so every hole is about $100,000. So we need to raise between $6 and $8 million to drill the property and improve from inferred to indicated, and to advance the associated technical work, the geo-environmental work, which we have already contracted to a reputable firm called Golders Associates. We need to do a little bit more metallurgical work to separate the copper from the moly, and we have given that work to Metcom Laboratories. We need to complete preliminary engineering, and we have given that contract to M3 Engineers. M3 Engineers are a very well-known, reputable engineering company that has done quite a few moly projects. Specifically with me before 3 years ago, we worked with M3 and the rest of these people that I spoke to you about to develop the Creston moly ore body in Mexico.
Okay. Development is always expensive. What is the financial picture like?
Okay, we want to develop Red Hills in stages. There is a tendency on some of these projects to go from 0 to 50,000 tons per day in one step, and that's very expensive. It's $500 or $600 million, and that is the reason why you see a lot of moly projects that are on hold right now, because they have price tags of $800 million to $1.2 billion. We want to start with a smaller operation, 10,000 tons per day, for under $200 million, and then expand it out of cash flow.
Okay.
We feel that as an expanded plant, we have between 20 and 25 years potentially. So, but we want to build it out of cash flow. We don't want to build it out of equity or out of debt.
Okay.
So we will start small, accumulate cash flow, and then do the expansions.
Okay. So let's talk a little bit about investor relations. Are there any analyst comments that would attract potential investors?
What we need to understand here is that moly is not the number one thing on people's mind. People understand copper. They read that there is a shortage of copper in the Far East. Moly is not very well understood because it's not a primary metal. It is an additive, but it is essential to whoever needs that additive. There is a perception among some analysts that there will be a lot of moly on the market in 2015 and 2016. So some people are reluctant to invest in moly. But if you look a little bit deeper, you will see that the projected surplus of moly is based on 4 or 5 projects being in production in 3 years.
Yeah.
If you go behind the scenes and you look at those 4 projects, you will see that they have not been financed, that they have been on hold for many years, and their capital cost is too high for a junior mining company to finance. So you have to look a little bit beyond the projected surplus, and you will understand that we want to be in production in the next 2 or 3 years, and we are standing apart from the big group because our capital cost is going to be a lot smaller than their capital cost.
Okay. So in closing, why should a potential investor consider your company?
Okay, we are currently, we believe that we're severely undervalued. We have a resource which is very big. We only have 35 million shares outstanding. We will probably be diluting ourselves a bit for this year's program. And if you consider the value of the resource and you put a value on it, and then you compare us to other companies that have traded that kind of resource, we should be in 3 figures of millions of dollars, and then you figure it out.
Okay.
An investor should look how many shares we have outstanding, what is the value of the resource, what are equivalent companies trading at per pound in the ground, and you will see that we're severely undervalued today.
Many thanks for the interview, Sadek.
Thank you very much. Thank you. Good pleasure.